In today's video, we're going to show Forex traders how to trade the Forex market in a regular or Roth IRA. So if you want to trade your money in a retirement account, you can do it tax deferred or tax free in a Roth IRA. An IRA is an individual retirement account. They're available in the United States, but there might be other local laws that allow investing or trading inside of a retirement account, but this particular lesson applies to USA traders. So if you want to set up your Forex IRA account, regular IRA or Roth IRA, you would need to have a custodian, and a custodian, here's some custodians here. You can click on these links and it'll take you to the custodians. So you'll be able to trade the foreign exchange in a Roth IRA or regular IRA with these custodians. And if you want some other handy tips for selecting a Forex broker, you can click on that link and it'll take you to information on our website about how to select a Forex broker. In order to fund your IRA, you can make an IRA contribution. You can fund an IRA with up to $6,000 to $7,000 per calendar year to either a regular or Roth IRA. And if you want to know the contribution limits, you can go to the IRS website with this link right here, and it'll discuss that. Now, you're trading the Forex with 50-to-1 leverage in the United States and higher outside the United States. So basically, one annual contribution should be enough to fund your account to get you started to building tax-deferred or tax-free long-term revenue in an IRA. By the way, one thing I forgot to mention was that on the custodians, make sure you check the annual fees. Some of them have very low fees. Some of them have no fees for small accounts, etc. But some of these custodians charge fairly high annual fees. Make sure you're comfortable with knowing how much that is before you set up the regular or Roth IRA. Check the custodian's fees. Now, a Roth IRA, let's say you add some money to an IRA and you trade the Forex in a Roth IRA. Okay, well, the money builds tax-free, so any distributions you take from the IRA are tax-free. So if you build a big trading account, and you can do this with the Forex early warning trading system, after you reach a certain age, you can withdraw the profits and you will not pay any tax on the profits. So consider a Roth IRA also with one of the custodians listed. And these custodians, you can do some Google searches and I'm sure you can probably find more custodians than we have listed here. But this is a good list to get started. So the Forex early warning trading system is a profitable trading system, and we think you can combine this with trading in an IRA to build tax-deferred or tax-free wealth. So you can have tax-deferred earnings or tax-free withdrawals with a Roth IRA. This would be for a regular IRA. And make sure you compare the custodians' fees, annual fees, withdrawal fees, whatever they charge. And make sure you have a fee structure on the custodians that you choose to use. So this is how to trade the Forex in a Roth IRA or regular IRA, and this is one of our 35 lessons on the forexearlywarning.com website.